Good evening.
A very warm welcome to each and every investor present here and welcome to today's event. We have with us our Chief Investment Officer, Mr. Sunil Damania, live for the most awaited Equity Outlook event. After a quick recap of the previous month, he would be providing his outlook going forward for November and also address factors like the market trend and Fed rate cut possibilities. Towards the end, we'll also be having a short Q&A session. Over to you, Mr. Sunil.
Thanks a lot, Jason, and very warm welcome all of you. First, the good news is that Jason has joined back. In fact, he has gone for a study and he has completed his CFA. Now he's again come back to the Mojo family. So please welcome Jason today. In fact, he'll be asking questions once my presentation is done. So welcome, Jason.
Thanks a lot, sir.
Okay. A lot of events took place in the month of October. A lot of events are lined up for the month of November. So I think we have an action-packed days ahead. In fact, today is one of the crucial day where the whole world is waiting for. There's a meme going on on the social media that the US is a labor, whether it's a boy or girl. So that's the thing we'll come to know. And of course, I'm going to discuss about that also in a short period of time. But before I start, my favorite slide, disclaimer. Okay, this webinar is just to enhance your understanding about the equity market. Investment in the securities market are subject to market risk and past performance is no indicator of future returns. With this, what happened to the market? I think October really turned out to be a really testing time for not only for the retail investors, even for the institutional investors. We saw red ink across the board. Not a single sectoral indices which close in the green. So one can understand the amount of this one. Cracking more than 5% in 1 month is too much. Normally we talk about 12 to 13% return CAGR in a year. And in cracking 1 month 5% does create some amount of a scariness. Yesterday also we saw market going down. That's in the month of November. And today market was in red, eventually close in the green. Now the basic question many investors are asking that is the honeymoon period over for the equity market? And I think, till September, every retail investor is very confident that they can make money. Now that question mark has started creeping in the investor's mind because they got stuck with the companies which has fallen as high as 40%. They don't know what to do with those companies. Should they buy more? Or they're catching a falling knives. So I think that is what exactly has happened, and I think October did create some amount of question mark in the mind of the retail investor. What has come as a big surprise to me too actually is that the September, in the month of October, the small cap declined much lower than the large cap. Normally when you see the fall happening, normally it's a small cap which would lead the pack in terms of fall. But that has not happened. In fact, small cap actually outperformed the Nifty50 and that really comes as a surprise. And very obviously when there was a red ink, more companies declined in the month of October as compared to advance. If you look at the FIIs, and I think this is a very interesting data, 94,000 crore in a 1 month. So if you go back a couple of years back, FI would put in a year 50, 60,000 crore in a year. And that was a good numbers we're talking about. In the history of India, FI has never sold more than 64,000 crore in a month. But 1 month, 94,000 crore. And that's normally, even if you see this kind of high number, normally happen with this black swan events, where we had 2008 global financial crisis or March 2020, when we had seen, what we call the health crisis because of COVID. But there is no such event and 94,000 crore has gone out of the system in just 1 month. And due to that, FII, which was more than 1 lakh crore YTD, has now a minuscule. And if I don't know what the number is today, but if I have to look at YTD, it could be in a negative also. Not only FII sold very heavily, but trading volume has started. I'm talking about the cash volume, not the FNO volume. trading volume has come down more than 1 lakh crore on many occasions in the month of October. And I'll show you some data. Month after month, the volume has been going down. In other words, the level of participation in the market seems to be coming down. Okay, and that doesn't augur well for the people those who are into broking, people those who are into this. And I think eventually this sentiment will percolate down to the IPO market. Some of the two leading firm which created a lot of hype, Ola and Hyundai, both are quoting below the offer price. And I think eventually market will start realizing that, where you need to be a little selective in terms of your stock selection when you apply for the IPO market. One of the reasons why volume took a beating, and of course the real effect will come in the coming months, post-December, where the weekly options will become restricted to one per exchange, and the lot size will increase. But SEBI announced certain measures which is going to impact the market very badly. And I think Nidhi Kamath of Zerodha suggested that volume could get reduced by 50%. So that will happen in the beginning of 2025. But that's what happened in this. One sad moment which happened in the month of October, we lost Ratan Tata. I distinctly recollect in my previous organization when I wrote to him, he always good enough to write back to me, thanking that, sending me the copy of the magazine which I used to at that point of time. And he always was nice enough to say, I'll look forward to reading your analysis on this one. So we lost Ratan Tata, but of course, he has created an enduring legacy. And I think we all know that how strong Tata Group is. It has survived many leaders, and we have seen one leader passing on baton to the another one. And I'm so sure that Tata legacy will continue, but we lost him. That's a very sad moment happened for the business community. Retail inflation in India unfortunately moved up to 5.5%. If you remember, I was talking about that retail inflation is going to remain a little sticky purely because the food inflation is really high. We saw that happening in the month of August, and we saw in the month of September. Unfortunately, don't expect inflation numbers to be better for the month of October also. We will see numbers to be at the elevated level as and when the October numbers comes out. So August was higher than July. September was higher than August, and I think we will expect October to be a little higher than the September. As again, exit poll turned out to be complete disaster. We saw that happening with the general election, and we saw that happening with the Haryana Assembly election also. BJP retaining the power, and it was not expected. And I think that really helped market to improve to some extent the sentiment. Why? Because if had Haryana been lost, I think some of the coalition partners would have become more aggressive with the BJP. Number one, opposition party would have become more aggressive in terms of taking on the government. So that's what has happened. But at the same time, we do have, in the month of October, Maharashtra and Jharkhand election dates have been announced. And this month, that's in the month of November, both the election will be out, a result will be out, and I think market will closely watch, especially the Maharashtra. It is going to be a tough fight. Why? Because there is no head-on between BJP and the Congress. It's a coalition government, and what data suggests, typically, when there is a direct fight between BJP and Congress, BJP seems to be doing better. But when there is a coalition, it will be going to be a tough fight. We'll wait and watch. I don't want to make any assumption or any prediction who is going to win the election. GST collection, it was really little soft. And if you remember, I have been talking about that thus seems there's some amount of softness. In RBI monetary policy, when they came out, that they did mention about the urban slowdown. Ministry of Finance, when they came out with the monthly economic outlook, they also admitted there is a softness. But for the month of October, the GST collection reached 6 months high at 1.87 lakh crore, which is a very good set of numbers. And I presume and believe that as and when the data for November will come, October will come, it should be, that is the GST collected and paid in the month of November. So that means in the month of November, the numbers should be good. Why? Because I have been informed that festive sales this time has been better as compared to what it was the last year. Inflation remains sticky, and RBI chose to play little safe. They did not announce any rate cut. I'm strongly of the opinion that RBI should cut the rate. I don't want them to behind the curve. Why? Because economy needs some amount of a support from the central bank. Why? Because the numbers are not looking so great on the economy front. And if you look at the numbers that has come out from the India Inc. also, not very bright. Unfortunately, the commentary also has been little subdued from the India Inc. for the third quarter of FY 2025. Manufacturing stock sector shown some kind of deceleration, and service sector seems to be remain little robust. While rural demand is increasing purely because of good monsoon and Manrega and so on and so forth, the problem seems to be with the more with the urban demand. And I think that's where not only the RBI talked about, but Ministry of Finance also did give some kind of a, if you look, happen to listen to the commentary from Hindustan Unilever, post-September numbers, they did mention that urban demand is a concern. If you happen to listen to some of the commentary from the retail players also, they do admit that urban demand is a problem. So I think that's where we need to understand that aggregate bank credit grew by 14.4%, while deposits saw a 12% increase. Again, the credit deposit ratio continues to be a challenge for this. And India Inc., I think no one was expecting that numbers to be so bad, and I'm going to discuss about that. One of the reasons why market took a beating in the month of October purely because of India Inc. commentary, and the numbers are much below what was market was expecting. Clear cut thumbs down to Q2 numbers of India Inc. Let's shift focus from India to the global. While OECD has improved the global growth by 10 bips, but the manufacturing PMI declined to 48.8% in September, 48.8, not the percentage, sorry, 48.8 in September as compared to 49.9 in August. My sense is that even for the month of October, this data would be down. Why am I saying so? Because what's happening to the crude oil prices does gives an impact, does gives an indication that everything is not hunky-dory with the global economy. You know, the crude oil price has a really very volatile in the month of October. Why? Because the China announced stimulus package and we saw crude oil price surging, and then it subdued. And if you look at that, the price, and in fact, yesterday again, OPEC has, so they basically, they were supposed to hike the crude oil production, OPEC plus country. In the month of October, they said we will postpone by 2 months. And yesterday they again announced they will further postpone by 1 more month. Why? Because there is no demand. And one of the reasons I am saying manufacturing PMI, even for the month of October, will be little subdued for the very simple reason. Crude oil price does give an indication that global economy is little soft right now. And if that is so, I think it's going to be a challenge. But at the same time, Eurozone exceeded expectation and they grew by 0.4% for the quarter ended September as compared to expectation of 0.2. So if you look at the data somewhere, while OECD, there are contradicting data coming out. OECD believes that global growth will grow, but PMI is not supporting that. If you look at the crude oil price, it did well, but Eurozone did better than what was expected. So there are mixed set of data. I think one need to really give weightage. What data you should give more weightage to come to the conclusion. My sense is that PMI data and crude oil price does give me indication that there is a little softness in the global economy, and I think that will get reflected as and when the Q3 data comes out. I can go wrong, but today my understanding tells me that I think we should brace for some amount of slowdown in the global growth. US, the big daddy in the global scheme of things, inflation continued to remain very, so while in India the inflation is moved up, in the US inflation has gone down to 2.4%, which is a very good sign. But I think the more thing that market is closely watching, and that creates some amount of uncertainty in the market also, not in India but even in the US, who is going to win the election? Unfortunately, we are not doing this webinar on a Zoom. Otherwise, I would have asked you people, please tell us who is going to win. It's not going to be easy. And in fact, I have taken some data from the Economist today. If you look at this, the Economist came out with this, the magazine I'm talking about, on a knife edge. And if you look at the data, it's almost 50-50, Kamala Harris and the Trump. If you look at this data, Biden was completely losing, and let me point out this so that you people get an idea. Here, it was clear-cut winner of Trump. And then you saw a yo-yo movement. Sometimes Harris was winning, looks like likely to win, while sometimes Trump. But when you look at this data, as of yesterday, almost 50-50. I don't want to go into prediction mode and who is going to win. Okay. But today, I think the market in the US, I don't know what is happening as we speak in the US market. So let me go to the, let's see what happened to the US market. It's not yet open, it looks like. No, it's not yet open. Market has not opened yet. So I think we'll need to wait and watch, and we will see what's happening there actually. I think the market is likely to remain a little volatile even in the US. But it's a tossing a coin. 50-50% chance who is going to win. Okay. Let's go back to some of the data, statistical data, and then I'll move forward to the how do we see the market going forward. 2 months in a row, more company declined than the advance. So in the month of September, advance decline ratio was negative. Second month in a row, the advance decline ratio is less than 1. Normally, we don't see that thing happening 2 months in a row. So if you look at the data I presented from April 2010, even if you go backward to 2022 also, we normally don't see 2 months in a row. Advance decline ratio is in a less than 1. And if you look at the volume also in the market, I'll come to that a little later. But if you look at the market cap, come back to what it was there in the month of June. In the month of June, 440 lakh crore market cap. In the month of October, it's 446 lakh crore. This is despite new companies coming in, new IPOs getting listed, so on and so forth. We came down to 446 lakh crore. In other words, when market falls, substantial, which takes out some of the gains which has happened. So what we saw post-election rally, we are very back to that rally, that numbers only. So, yes, market did move up in the month of July, August and September, but it came down and we are very close to what it was there in the month of June 2000 level. Volume which I was talking about, 6 months low. In fact, we have, in the month of May, it was 1.12 lakh crore. Average I'm talking about, which has come down to 1.06 lakh crore. And my sense is that in the month of November, we might go below 1 lakh crore. That's what my sense, which is very closer to the March 2024 level that we have seen. So it moved up from 1.12 to 1.52 purely because of June was a election month. So yes, it's very obvious. But then if you look at this 1.52 lakh crore came down to 1.39, further came down to 1.25, then further came down to 1.21. And in the month of, and in fact, in many days in the month of October, as I mentioned in my opening remarks, it was less than 1 lakh crore. But average, it was 1.06 lakh crore. In the month of October, everything was in red. But small cap declined only by 3.76. So there was no panic selling was seen in the small cap. But if you look at the Sensex and Nifty, cracking by almost 6%, and mid cap almost 7%. Auto index 13% in 1 month. You don't see that kind of a fall happening in a even sector. 13%. And those we have taken thematic fund with the auto as a theme in the mutual fund would have taken a huge betting. But look at the PSE index, down by 10% almost. Consumption is a problem, is down by 10%. And if you look at the CPSE, again this one, 9%. Realty index, which I have been a little cautious about, is down by 9%. Nifty metal, 9%. Other day, CNBC Bazaar called up and took my telephonic interview with some other experts, and I said that the China stimulus, and of course this is where the China basically stimulus was announced, so don't get carried away by that. We don't know how much the stimulus from China will result into a demand, a revival, and so on and so forth. In next couple of days, China is likely to announce more stimulus, and we'll come to know that in a couple of days. But do expect some announcement coming from China, because whatever the measures they have taken doesn't seem to be yielding, and that's reflecting in the Nifty metal index, which is down by 9%. What happened to the Nifty50 performer in in October 2024? IndusInd Bank was down by 27%. Nifty50 stocks down by 27% in 1 month. Remember, if you're holding that company, and even if you have a 10% weightage in that, the single stock will take down your overall portfolio by 2.7%. Single, losing more than 25% 1 quarter is too big. Bajaj Auto, 20%. Normally we see this kind of a fall happening with the small cap and mid cap. You don't see this kind of a fall happening. And it's not that the story is terribly wrong with them, am I right? The numbers did come out, and so the Bajaj Auto also came out and they gave the guidance. And of course, then Rajiv Bajaj clarified that the market not understood what its executive director meant saying that. But look at this, 20%. Maruti Suzuki down by 16%. Tata Consumer 16%. There is a one trend which I saw, lot of Tata Group companies saw. So if you look at top 10, Tata Consumer is Tata Group company, Titan is a Tata Group company, Tata Motors is a Tata Group company. So if you look at it, 3 companies are from the Tata Group company which has taken a beating. But there is one more thing which you can see, Maruti Suzuki, Bajaj Auto and Tata Motors are from the auto sector which has taken a beating. If you look at one other trend, is a consumer facing. Tata Consumer is down, Titan is down and Hindustan Unilever is down. So when you run a theme there is a theme which is playing out that auto, which is again a consumption, is down. If you look at the FMCG, again a consumption which is down, which is the theme really playing out. In terms of, while IndusInd Bank was down by 27%, the best performance for the month of October has been ICICI Bank 1.5% up, State Bank of India 4.1% up and HDFC Bank up by 0.2. So there is no trend as such. It's more company specific than the theme specific. That is what has happened. Let's move on to the institutional activity. October month, as I was talking about, 94,000 crore, and due to that, till now YTD only 6,600 crore, the FI has been positive. And if you look at the data, where FI has sold more than 30,000 crore, the data I have compiled, October is the highest ever, 94. March 2020, again a COVID month, 62,000 crore. And June, and look at this trend, June, March, these are 2022. So Jan, they sold 33,000 crore, Feb, they sold 35,000 crore, March, they sold 41,000 crore, April was not there, but May 39,000 crore, and again in June 50,000 crore. So in 2022, month after month, FI sold very heavily. And do we expect something similar in the month of November? Probably yes, we might see a negative FI inflow coming in, but not so much. That's what my sense is. In terms of the valuation, market has become now reasonably valued as compared to what it was last month or so. It's not that Indian market cracked. Even Nasdaq was down, even S&P was down, even Dow Jones was down, and even the Chinese market were down by 1.7%. This is despite FI taking out some money from India, putting that money into the Chinese market and other emerging markets. How is the historically November has been performing? If you look at the historically, there is not much but to choose between advance and decline. Almost 6 times the month in the month of November the market has moved up, but for the 5 times the market has basically gone down. So there is nothing much to choose between these two. In fact, in the month of September it was completely opposite. Like the market went down in the month of September, but in 2024 the market went up. Historically it was down. October it was reversed. October normally has been the good month for the market, but this time it has been, for a change, market moved down substantially. So don't get too much. What should we expect going forward? I think market is closely watching Indian numbers, and I must tell you that as the commentary comes out today, Titan came out with the numbers. We do expect Titan to be volatile tomorrow. So I think there are company-specific numbers that market is watching very closely, but don't look at the numbers in isolation. My request to all of you, look at this as a theme, which I was talking about, FMCG as a theme. When you should look at one of the worst performer in the month of October, there's a theme which is playing out. Tata Consumer and Hindustan Unilever. There is a theme playing out, auto, which is again a consumption basket playing out. So I think there's a theme which is market is looking at it, and the theme clearly says that numbers are not so good. The market will closely watch the commentary that are coming out and what needs to be done. Unfortunately, the Indian commentary, when you go through the complete numbers, and which I did with our PMS customers last Thursday, I think the theme continues to remain that they are a little cautious on December numbers also. Doesn't give a very good confidence level. If you look at some high frequency data also doesn't give enough confidence. I think the diesel consumption doesn't seem to be too high. Even the power consumption doesn't seem to be very, very high. And of course, that could be more of a seasonal reality. But the data point doesn't. But GST numbers are very good. So I think we need to really wait and watch what happens. But US presidential election. Today is a result. Do not expect that we will have the winner known by the time you wake up tomorrow morning. The reason I'm saying so, why? Go back to 2020. The winner was not announced on the election day. It took 4 days for US to announce the winner. And not only that, formally the winner will be announced only on 6 January 2025. And of course, there are many people and there are many pundits which says that there could be it can go to the legal also, court also. Why? If there is a narrow this one kind of a stuff. And formally, the new president will take power on 28th January 2025. So do expect election, the related volatility in the market will not get subside today evening or tomorrow morning for the Indian market. It will remain for quite some time. FOMC is going to announce on Thursday. Today, market is going to look at what's going to happen in US. On Thursday, market will look at what FOMC will announce. There is a 98% probability as I speak to you, 25 bips rate cut. If I would have talked last month, same time, it was the 50% rate cut was a probability. No one talks about 50% probability. Now 50 bips cut. Now it's out of the window. 25 bips rate cut is expected. What has happened very surprisingly, and this market is acting in a very funny manner. Despite the rate cut, if you look at the bond yield in the US market, has gone up. How does one explain? Despite the rate cut, of course, when the rate cut happened, the bond yield gone up at the same way the gold price also gone up. So market is really behaving in a very different, it's basically not going by the rule book. If this happens, this should logically happen. Doesn't look like that's where it's happening actually. Normally when people say the geopolitical tension is happening because of Iran likely to get attacked and so on and so forth, the crude oil price should have gone up. It's not gone up. And that we have seen between Russia and Ukraine war, we have seen that with Israel and Hamas. So sometimes the rule book says something else and market is behaving something different. So don't go by that. What happened in the past is likely to happen in going forward also. Can we show the slide, please? The markets will closely monitor the urban demand. I think one big spot that market is going to closely watch is the urban demand. The festive sales are really done well. That's what the data suggests. Am I right? In terms of the mobile sales, Apple came out with the statement that India sales have been extremely good. I'll tell you, other day I went to Jio at BKC, the Apple store. The complete mall was relatively empty because I wanted to buy an iPad Air for my daughter, and I was waiting in a queue, queue to be attended by the salesperson at the Apple store. There was a completely chock-a-block in the kind of so that shows. So I think it's more like a K-shaped kind of a demand where the premium products are doing well, but the mass product seems to be little challenged. So I think urban demand is one data which market will closely watch. Whatever happened because of festive, does it get sustained going forward? One big hope right now, the marriage season. And if the marriage season does revive the growth, and that's what Maruti says also, that what we did in the month of October, which is the best month supposed to be, will get repeated in the month of November also purely because of the wedding season. And I'll come to the wedding data little later. Second quarter GDP will get announced on 29th November. Expect that numbers to be little soft. Okay. Another thing, 25th November, the winter session of the parliament is beginning. We also have an election of Maharashtra, which is also coming. I'll come to that in the next slide. Expect some more political announcement. We know like when the parliament is on, a lot of allegations and counter allegations do happen, and that does impact market sentiment one way or another way. But more closely that one should all be watching about on November 23rd. Why am I saying so? Of course, both Jharkhand and Maharashtra will get announced the elections. I think market will closely watch the Maharashtra election outcome. So do best for the first of course exit poll will come, and then we'll have. Don't give too much importance to the exit poll now, because what has happened is that the general election they've gone completely wrong. We have seen that happening with the Haryana election also. So don't give too much credence to that. But 4.8, that's 48 lakhs weddings are going to take place in next 2 months. I think market will closely watch. Are people buying more of wedding related? Like, of course, I don't know what Titan is going to discuss about in the con call, because I'm in front of you. But it will give an idea what kind of demand they are expecting from jewelry, I think somewhere the higher price seems to be impacting the demand. That's what my sense is. In fact, I was reading one analysis on a report which says that this time airlines, as compared to last Diwali, prices are more subdued as compared to what it was there last year. So that may be another way. I think there is some amount of price resistance that's creeping in, where people are not willing to pay price and not willing to buy the products at any price. Okay. So let's see whether this demand which has come up because of festive season that carry forward to the wedding season or not. I think we will need to wait and watch. But this time, fortunately, there are more wedding dates that are there. In fact, I've been invited in a couple of marriages this time, which was not so many last year, same time. India Inc. failed to impress, so let me put the data in perspective. Y-on-Y, there is a decline of 1.5%. Something similar numbers we saw in September 2022. Otherwise, we normally see an increase in the net profit Y-on-Y. So yes, demand is soft and the outlook is also soft. I'm done with my presentation. Let's open the floor for the question answer. Over to you, Jason.
Okay, I'll start off with this first particular question. This is by Om Prakash, and a few of the investors have also written this today, is that in the afternoon the market suddenly shot up. What could be the reason for this?
I think Om Prakash, so to be very honest with you, I don't look at the market on a intraday basis. But the reason I know, because my dealer came back to me, because we're buying something in our PMS, and he said, sir, the price have gone up. What should I do? Should I go ahead and buy aggressively, or should I wait and watch? And I said, please go ahead and buy, because that's what. But my sense is that the reason why it has happened, I think purely because of market seems to be of the opinion that US election would not be 50-50, in the sense it would not be knife edge. I think we will get a clear-cut winner. And that's what my sense is. Because of the US presidential election, market seems to have moved up. But don't take my statement at the face value. I'm making an assumption or based on my limited understanding. But don't read too much into that. Why market moved up intraday? What matters? See, we are all investors. We are not traders. Am I right? So what happens in the intraday has no meaning. Okay. What we should make a strategy is that what should be my strategy over a medium to long term. I'm the last person to take intraday market. In fact, I don't look at my portfolio on a daily basis. I don't take it market on daily basis. Sometimes there are no trades in our PMS. Even I don't know what happened to the market. Sometimes someone asks me, "Aaj market mein kya hua?" And I said, I also wonder what happened. Sometimes I'm in my meal, and if I happen to meet Mohit or Joyson or Amit, and they basically said, how is the market? I don't know. And then I basically ask my dealer, boss, what is the market? Just help me understand what is happening in the market. Don't give too much importance to the intraday, what happened to the market.
Trump's victory may be better for India and our stock market and vice versa. What is your view on this?
My view is that whether Trump comes or Kamala Harris comes, there is no impact on the Indian market. Why am I saying so? Because India's growth story has been so strong. I remember when Trump became a president in 2016, he was talking about H-1B visa. Go back. There are a lot of videos available and a lot of news available. People say Trump coming is going to be a not so positive for the IT companies. We all know how IT companies perform. So, see, remember, one is that election campaigning. You become rhetorical. मैं ये कर लूँगा, मैं वो कर लूँगा. Will you be able to actually do it in the real life? Remember, some of the suggestion given by the Trump, doesn't look very practical. Doesn't look at all bit practical. Why? Because it's going to increase the competition. See, you can't suddenly stop someone from supplying goods to your country. Do you have the capacity to produce that? If you don't do that, there is a demand-supply equation comes into picture. That will shoot up the price. And when that shoot up the price, who is going to be? So, don't get too much into that, whether Trump is good. I must tell you with confidence, if I have to be in front of you in 2028, India would have done much better, irrespective of who comes to the power in this one, as compared to the US market in dollar terms.
Okay, this next question. Under the falling scenario, should the investor follow watch and wait strategies?
No, sir. In fact, I was doing some reviews with our PMS customer today, and someone asked me, and I said, please go ahead and invest. The fund yet you don't what is wait and watch? What is wrong with yes, the numbers are not so great from the India Inc. numbers for the September quarter. The commentaries doesn't look very exciting even for the December quarter. But is it the gone story for India? The answer is no. The valuation become quite reasonable. If you look at the 10 years average versus the present price to earning, I think we are in line today. The market capitalization just seems to be a little higher. But I think the fraud which is there is slowly. So what I request you, sir, be company specific. As I told you, in IndusInd Bank went down by more than 25%. But at the same time, SBI did well, HDFC Bank did well, ICICI Bank did well. In the same month, same project, same sector. So have company specific. Don't wait and watch. Be careful of what you get into. If the companies are running little ahead of the fundamentals, be careful of those companies. Don't get into those companies. My request would be. But keep investing. Just to give you an answer, sir, I invested in my personal portfolio on Murat days. I did not apply that wait and watch. So if you have the money which you don't need for next 3 years, please go ahead and invest. If you are a little concerned about it, split into two parts, your investment. Provided that investment amount is less than 25% of your present equity exposure. If it is more than less than 25%, please invest immediately. Don't do wait and watch.
Okay, this next question by Mr. Bharat. Mojo people are data people. On staying with Mojo for about 5 years, I've understood that everything is based solely on data here, due to which many times so many opportunities are missed which are news based. For example, let's say a company is receiving a huge order, trapped in governance issue, or a fire broke out in the company, or a SEBI probe into some company due to some reason, and so on. Such news tends to cause great impact on stock price, positive or negative as the news may be. Don't you think that we should have some mechanism on this to exit or enter a particular stock on the consequences of the said news?
So, Bharat sir, I will disagree with you almost on all points except one point, which is the corporate governance. When there is a corporate governance, we do actively take a call on that. Give you a classical example, Lux Industries. Since you have been our subscriber for 5 years, if you recall, Lux Industries was our stock of the month also. Not only Mojo stock, but stock of the month. I came in front of you people and advised you to get out of that company. Why? Because SEBI initiated an investigation about the possible insider trading. We moved out of that company. So we do take into concern that way. When there was a concern raised by the SEBI on the future retail, we did suspended the call on that company, if we go back to that. When DHFL cracked by 50% in one single day, since we are then for more than 5 years, we suspended the rating at that point of time also. So when there is a corporate governance issue or there are issues, we do suspend the rating or we do take an adjustment of that. But tell me, and in fact I was reading a very interesting article today. People believe that if company gets added to the index, it should logically do well. The GE was removed from Dow Jones. What happened to that company after being removed from the Dow Jones? It's outperformed significantly. The company, I'm not able to recollect the name of the company in the US I'm talking about. The company which got added is down by 65% or something after being added to the index. So sometimes what we believe, now if you invest purely based on this company did well, or this company got a huge order, that spot will be there on one day. But do you know that this order is a value accretive or not? It may be EPS dilutive. Why? Because the company would have bid it very aggressively, which may not add value to the. In fact, it could be loss making. Like classical example, if you go back, rewind 4-5 years back, when Larsen and Toubro received one of the metro project, the script shot up based on that. Today, L&T wants to get out of that metro project, but it's not value accretive. It's basically pulling down the net profit. So don't get carried away. In fact, had that been so simple in the market, you don't need expert like us. किसी का order आ गया, उसको ले लो, and this is all available in public domain. Why do you need then market manager? Why do you need Sunil Damania? Why do you need Ramdev Agarwal and other fund managers in the country? It is so simple. Am I right? Except corporate governance, I don't think these are issues basically, because ultimately this news has a very limited impact. Maybe for one day or so. Do they result into a wealth creation story? The answer is no. There are no evidence. If you can prove me wrong, I'll be more than happy to know, sir. I keep coming in front of you. Please come out with the data which says this is what has happened, and that because there's you missed out on opportunity. I must tell you that if you look at since you are there for 5 years, if you had followed 5 years advice of markets purely based on data, I think we would be on the top quartile in terms of performance against each and every fund manager in this country, the top quartile. And the reason I'm saying so with confidence, because we know what we have done and what kind of returns we have delivered to our investors in the 5 years period.
Okay, this next question by Rajiv. Hello, Mr. Sunil. Does the India-Canada relationship have anything to do with the FI withdrawing from the Indian market?
So Rajiv ji, let me tell you some information. So in the society where I stay, we have a restaurant there, and this restaurant has arranged for one dinner party. Almost 60 people had joined for that, and I happened to meet, I can't name that person, is one of the leading investors of the Canada investing in India, and I asked him, sir, are you people selling in the market? And he said, no, to the best of my knowledge. So I don't think, and I don't have a color right now of how much of 90,000 crore which has been sold by FI, how much from Canada. See, remember, I think this, don't mix politics with the FI investment. My understanding and my limited understanding is that I don't think Canadian FIIs, put it this way, the FPI which are registered in Canada have sold substantially in the Indian market because of Canada-India relationship. I don't see any kind of a relationship there. So I don't expect heavy selling from Canadian FPI. But I can tell you that this gentleman did confirm to me that they were not the sellers in the market.
Okay, this next question by Mr. Xavier. Hello, Sunil sir. Hope you're doing well. I have two questions. Mohit sir had mentioned during the last Q&A on a model portfolio webinar. Any idea when would that be coming out? Also, would you suggest which is the better approach, model portfolio or PMS? Please give your honest opinion. Thanks, sir, for the time.
So Xavier sir, you should take my view with a pinch of salt. The PMS, we have a better IP as compared to the model portfolio. And if you have the risk taking capacity, because PMS are little high risk, high return strategy, you don't need the funds for 3 years, please come to the PMS, because PMS is a better IP as compared to the model portfolio. But if you don't have 50 lakhs, because in PMS you need to have minimum 50 lakhs, then you can continue with the model portfolio. Take this, the reason I said take with the pinch of salt, why? Because I'm in the PMS business, right? So I'll be a little biased in my opinion. But if you ask Mohit also, he will candidly admit, okay, between the two IP, PMS is a better IP. So if you have a funds more than 50 lakhs, come to the PMS.
Okay, this next question by Mr. Sagar is actually a suggestion, I think. Your webinars are informative, but nowadays the webinars are not available once it is completed, as it happens in Zoom and sometimes we miss it due to the schedule later. So our request is to keep all of them, including the special webinars, open for at least a week in the previous webinar section so that we can listen, and if it's missed out, we can also keep them.
So I don't think this is right actually. Yes, I do agree that when the webinar was done in a Zoom, that was not kept on the YouTube, Kevin? The webinars are kept on the YouTube, am I right? All the webinars. Sir, I think all our webinars, not only for 1 week, it's available. So you go on Markets Mojo page, and this webinar should be available, including this webinar should be available. So I don't think, sir, we are removing any webinar. For Mojo PMS customer, we send you the link through an email, and that link, whenever you click, you will be able to watch our webinars. Not only that webinars, you will also be able to see the complete PPT that we made in that webinar. So we attach the PPT also in that. So I think, sir, if you are missing out any webinar, please do write back to us. Our team will send across, or they will send you the link where you can watch this old webinars. But all webinars are available on YouTube. Am I right?
Yes, sir.
Yeah.
Okay, this next particular question. Dear Sunilji, I don't know whether this can be shared in open or not. I have been observing my model portfolio and it has passed the October litmus test. It has remained rock solid. As a matter of fact, it has made profit thanks to the IP. It maybe sells some stocks which were doing well in the beginning of the month. I followed it much against my wish, but at the end of the month, I see the magic. My model portfolio made profit even in the month of October. I think the IP has more artificial and natural intelligence. Thanks and festival wishes to all of you there.
Thanks a lot, sir, for your season greetings, and I'm happy that, sir, your portfolio has done better in the month of October. If you look at our PMS also, it's not that we are close in the green, I must tell you, but as compared to the benchmark, we have fallen less as compared to the benchmark in the month of October, both for Sol and the power. So you are right, our IP is doing wonders, and sometimes, we think, since this IP is not taking into consideration the news and other information which is floating around, how it can perform. But the way we have created this IP, I think it does gives an idea, or this helps us in terms of navigating even the challenging time. So thanks a lot, and I'm very happy that your portfolio did well in the month of October.
Okay, this next question by Mr. Usman. Dear Sunilji, long time in Shubh Dibawali. I have the following suggestion. In the Markets Mojo page, portfolio movement is compared with Sensex, but most of the portfolio stocks or most of the Mojo stocks are not included in the Sensex. I'm suggesting to also give other options to compare it, like Nifty 500, Nifty mid cap, Nifty small cap, and so forth.
No, good suggestion, Usman ji. And after a very long time, I'm seeing your email, question. So when you construct a portfolio, we also have a what is it called? आपने बोलते जो the composite portfolio index we create, which takes into consideration your portfolio construct. So while Sensex is there, by default it is there, but we do give composite portfolio. So I'm sure that should serve the purpose of this. But we are saying we should give more options, or are you suggesting that as an investor we can choose? I think it's a good suggestion. Kevin, why don't we consider this? If it's possible, why don't we give an option to the investors? We can have a drop-down menu where customers can choose which index he or she wants to compare the performance with. I think it's a good suggestion. We can definitely compare that. We can put that option. Just put it in a wish list.
Okay, we'll make a note of that. This next particular question. India's GDP figure is 7.2, then why it's not reflecting in company earnings? Is something wrong with the GDP data?
So, sir, I think if you look at the latest the report, monthly report coming out from Ministry of Finance, which clearly said that they do expect the GDP not 7.2. 7.2 is the data given by the RBI, and RBI maintained in the October monetary policy also. But they are saying somewhere between 6.7 to 7%. So I think that's what would happen. And this GDP is for the full year. It's not for the one quarter. So the June numbers were really good, am I right? September is a little subdued. We'll wait and watch. For some reason, if the numbers are not reflecting company, it will reflect the GDP also. Don't go with the assumption that GDP data are fudge. If that was the case, you would not have seen GST collection good. You would not have seen direct tax collection has been good. Am I right? Government has done extremely well in terms of direct tax collection. I have not put the data in my presentation, but the data till now has been quite robust on the direct tax front also. And GST collection, if my memory serves me right, net of the gross collection is up by 9.9% YTD till now. So I think eventually it should be a function of GDP only, isn't it?
Okay,
Sorry, my nose is blocked, so yeah.
Okay. Yeah, Mr. Rohan has put this question 20 times, so I'll pick it up. It was a few months back, I suggested and also give a feedback for adding the Nifty Microcap 250 index in the screener section. Yeah.
So I think what is the challenge that we are facing? Where does he want microcap index to be screener section?
Yeah, and in the index feature, yeah, I think he wants to add this particular thing.
No, screener section. What do you want, sir, to Sir Dhawanji? If you can specify what, why don't you write an email to us and maybe my team will look into this. It's more of a product related call. So let the product right person take a call on that. Just expand your what exactly you need in a screener section within the Nifty microcap, and we'll try to see how feasible that is.
Okay, Mr. Sunil, that's it with the Q&A session.
Are we done with the questions, or because of paucity time we are basically concluding it?
Yeah, we have just a few more questions. I can pick up some of them.
Please do that. Now it's unfair to them because
sure.
Yeah.
This one particular question by Mr. Srinivas. Whenever there is a state election in India, I see FI pulling money. Are these FI part of political connection?
Sir, I don't know whether they have political connection or not. I have no handle on that. See, sometimes some event do make an impact in the short run. Who talks about general election now? No one talks about Srinivasan, sir. Am I right? So these events will keep coming. Who talks about COVID? No one talks about Russia-Ukraine crisis. No one talks about. Who talks about Israel-Hamas crisis? No one talks about it. So these events have an impact maybe for 1 month, maybe for few weeks, and so on and so forth. As an investment strategy, don't try to read too much. Sometimes we try to overanalyze those events, and that's great. Whether they have a political connection or no political connection, how does it matter? You are investing in a company based on the company's fundamentals. If the company fundamentals are good, valuations are good, you go ahead and invest. Whether that FI has any political connection, no connection, how does it matter? Because ultimately you will make money. Because you have invested the company based on the pure fundamental. So that's why I said, keep your mind free from the trivial matters. Because if you cloud your mind with the information which is not needed to take investment decision, eventually we will end up making a wrong decision. The one thing I've learned in my life in 30 years is that cut the noise. Focus on those data which helps you to improve your investment decision making. FIIs का connection political से है या नहीं है? How does it help you to select stocks, or how does it help you to improve your investment decision? No way. So why to then discuss and keep thinking about it and cloud your minds? Focus what matters, discard what doesn't matter. A very simple philosophy. Yeah, next question, please.
This next question. This is Mr. Kawaljit. Sunil sir, I want to invest 50 lakhs in the market. Is it the right way to have one model portfolio of 15 lakhs and purchase the remaining all Mojo stocks with an equal amount of 50,000 and or Mojo stocks with equal amount 30,000, or I have a 30 lakhs model portfolio and 20 lakhs to be invested in Mojo One stocks? Please advise the best strategy if I have to invest 50 lakhs. Thank you so much.
So Kawaljit ji, the one option you did not mention in this option is PMS, because you do qualify to be a PMS investor. For some reason you don't wish to come for PMS. I would suggest please go ahead with one model portfolio of 50 lakhs. The reason I'm saying so, if you invest based on Mojo stocks, human emotions will come in. You don't know when to exit from that. And eventually it will result in suboptimal returns. In model portfolio, will tell you how much you should invest, when to exit. We'll also tell you when you exit, which new stocks to come, bring it. So, and model portfolio is more systematic approach, more structured approach. So I would suggest please take 150 lakhs model portfolio based on a risk appetite, conservative, moderate or aggressive, and please do that.
Okay, since we're talking about PNS and model portfolios, this particular investor has a question there. What are the differences between these two, and why not the PMS is possible for 20 lakhs?
Sir, I wish I can take you with 20 lakhs also. So PMS, the SEBI guideline says I cannot onboard any customer with investment less than 50 lakhs. Even if you give me 49.99 lakhs, I cannot onboard you. So it's a regulatory requirement that we need to have a customer with minimum 50 lakhs portfolio. And that's the reason I cannot take you on board. And what's the difference between PMS and model portfolio? In model portfolio, we have three strategies: conservative, moderate and aggressive. Both our PMS strategies are a little more on a very aggressive side, number one. Number two, the IP that we are using in a model portfolio and IP that we are using in a PMS the PMS IP is much superior as compared to model portfolio IP. In model portfolio, we advise you to buy and sell. In PMS, we will actually buy and sell on your behalf. Am I right? So complete headache of when to buy, how much to buy, and everything has been taken care by us. So that's a big difference between PMS and the model portfolio.
Okay, Mr. Sunil, that's it with the Q&A session today.
I think Jason seems to be more in a hurry to go back home. So anyway, thanks a lot everyone taking time out and attending this webinar. This webinar will be available on a YouTube in case if you have joined little late, or if you want to pass on this webinar to your colleague, friends or relatives, do that. They will be able to watch this webinar little later also on our YouTube channel. With this, good night, take care. Of course, don't keep yourself awake what's going to happen to US election. Relax, enjoy. No one will talk about in next 7 days what's happened. I think market will take its own course based on the fundamental. So focus more on Indian story rather than what's happening in the US market. Good night, take care.